Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news the world's economy is handling the US tariff tax buffeting quite well. Financial market reactions to the US Fed rate cut yesterday and the nature of its split decision has seen the US dollar fall, bonds shift to a risk-averse tone, and Wall Street retreat, although it has recovered to break even in the past hour. The oil price has fallen as demand estimates in the US fade. Today, in a very big shift, there were 313,000 actual initial jobless claims last week in the US, which is the largest weekly rise since early 2020. There are now 1.965 million people on these benefits, 2% more than at this time last year. And we should also note that the US home ownership rate in the third quarter of 2025 was 65.3%. A year ago it was 65.6%. In New Zealand it's 66%. Their rental vacancy rate is now 7.1%, up from 6.9% a year ago. And US wholesale inventories are rising according to the late released September data, now up 4.8% from a year ago. But their inventory to sales ratio isn't anywhere near concerning levels yet. And US exports rose marginally in September, largely driven by the export of gold, which accounted for 70% of the monthly rise. Computer exports fell, and travel receipts by visitors also retreated notably. Meanwhile, imports into the US were little changed. The shift of gold out enabled them to record their lowest trade deficit since 2020. In Canada, however, their export growth was much stronger, but also featuring gold. Their exports jumped 6.3%, while imports were down 4.1%. That turned a trade deficit of 6.4 billion Canadian dollars in August to a small trade surplus of 153 million Canadian dollars in September, and ending the 2025 negative monthly outcomes. Canada's exports of aircraft and energy products, both oil and electricity, rose significantly in September. Across the Pacific, Japan's Business Survey Index for large manufacturers rose 4.7% in the fourth quarter of 2025, up from 3.8% in the prior quarter, and the strongest reading this year. This was better than expected, underscoring continued resilience in Japan despite trade frictions, growth concerns, and their mounting fiscal risks. And China has signalled that 2026 economic support from Beijing will be more modest than many had thought it would be. Switzerland reviewed its interest rate overnight and left it at 0%. They have inflation at 0.2%. We can also note that the Central Bank of Turkey cut its policy rate by 150 basis points to 38% overnight, a fourth consecutive reduction and by more than markets expected. They claim there that inflation is starting to ease, especially food inflation. Overall inflation is still running at over 30%, although that is half the rate of a year ago. In Australia, their November labour market report showed employment fell by 21,000 from October, an unexpected result, but it remained 182,000 higher than a year ago. Full-time employment fell in the month by 56,000, but part-time employment rose by 35,000. Their jobless rate was stable at 4.3%. Underemployment, though, rose to 6.2%. And global container freight rates rose 2% last week from the prior week, largely on the back of rising rates from China to the EU. Rates from China to the US are falling as trade volumes ease. These container rates are now 45% lower than year-ago levels. Meanwhile, bulk cargo rates are 111% higher than year-ago levels after last week's 14.8% fall off the recent peak. The US Treasury 10-year yield is now at 4.12%, down 4 basis points from yesterday at this time. And the price of gold will start today at $4,273 an ounce, up $70 from yesterday and back near its peak. And we should also note that silver has set a new record high at just under $64 an ounce, with another big move. And American oil prices are down almost $1 at just over $57 a barrel, while the international Brent price is just under $61 a barrel. And the Kiwi dollar is 30 basis points firmer from yesterday, now just on 58.2 US cents. against the Aussie were also up 10 basis points at 87.2 Australian cents, but against the euro were down 20 basis points at 49.5 euro cents. That all means our trade weighted index starts today at just under 62.3 and up 30 basis points from yesterday. And the Bitcoin price starts today at $89,977, down another 2.5% from yesterday. Volatility over the past 24 hours has been moderate, also at just on plus or minus 2.5%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.